Okay, I was just talking about the power of the crossovers above the zero line. Basically, what I'm saying is, as you see here, look at the end of 2010. You have the MACD go down, and it never goes below the zero line, and it crosses back up. You never even exceed that point ever again. But from that point, we rallied from SPY 115 to SPY 136. So you get a lot of momentum out of that. You get a lot of trend followers that are gonna pick up on that. Now with a move with there's so much obviously bad news going on there with the economy. It's just stuff is real. I mean, yes, there are a lot of people betting against the market, which obviously you have to be careful because if things resolve in a positive way or are spun in a positive way, they could really cause some short squeezes like they did last week. Yeah, you had a 100-point SPY move on some pretty bad news. Um, pretty. It seems pretty irrational, but if they have a reason to jam it, they will jam it. But I just don't. When the news gets so bad, sometimes you just got to, make sure that it's continuing down. Set some stops. As you get in the money, set some stops a little bit above so you don't get totally killed if it reverses on you. But once we take out the new lows, this thing is really going to waterfall down. This move was a lot of this move was on very light volume, as you can clearly see here, volume declining on these rallies. Then it increases here with the sell-off in 2010, and then clearly gets light again, and then it only starts accelerating again as the selling comes out, as the sellers come out. So there's a real long-term pattern of low volume melt ups, really low volume melt ups. As you get higher, the lower the volume goes, and when you sell off, that's when volume comes in. So that shows a major distribution pattern, in my opinion. And actually, it's a fact. It's a matter of, I mean, the market. This is an example of the market can remain irrational longer than you can remain solvent, because if you were shorting all this way up, you could make the argument that the market should be going down, the economy's a mess, blah blah blah. But obviously, you would have had the squeeze of your life, and you would have gotten killed continuing to stay short, unless you have very deep pockets and we're able to short at these peaks and take out some on the dips. Not really a good trading strategy. The one thing that has bears scared right now is what happened in 2010. Is you had the death cross, but then you had some base building, and then you wind up having a reversal back up. And see, that's why you had the powerful move from 102 to 136. Now you're seeing the second attempt, the death cross happening again. Now, are we setting up a base here, or is it that bear flag pattern that I showed you on the shorter term chart, which is eventually going to break down and confirm that this is the real deal, and we're entering, this is the next bear leg of this bear market. And as you see here, if 110.27 goes, you know that we're making the next leg down. Right now it is Sunday night, and the S&P futures are down 5.5. I believe fair value is, you add about another 4 points to it. So as far as the SPY is concerned, we're down about $1 from Friday's close right now. So we're at 116.85. So we already pierced this other support level here that I have on the chart. So that was a short-term concern for a bounce. The next short-term concern is this 114.50 area, which I think we may go down to, and then we may churn back up, and maybe even during the day, and rally up to the 116 or 117 area, and then come back down. So we could see something like that happen early next week. The other thing to look at is the DAX. This has been the strongest economy in Europe, and as you see here, this 53.45 level they're ready to take out 2010 lows. I mean, this chart looks like it's gonna take out the lows probably tomorrow, because Europe's markets are open tomorrow. The only markets that are closed, I believe, is U.S. markets. And you had the histogram came up, so you had to relieve the oversold condition, and you've gone nowhere. You couldn't even. You popped above the 18-day moving average for one session, and you sold back to it, and then on Friday you had another dump. You have the Bollinger Band is coming all the way down. You had the death cross here confirmed for a while. This next leg down here, I think this is really going to send our markets down too, because this is gonna put the DAX into the 4,000s. You have the histogram here losing momentum, as you see. Stochastic only got up to the 50 area, and it's turning down. Unless if you got a rally based on something that happens early next week, this index looks like it's pretty much doomed, and we're going to be heading into the 4,000s on this shortly. And that's one of the that is the best economy in the Eurozone, so that should tell you something. As you see here with China too, and a lot of people are fearful of a rough landing for China. They have a lot of fraud going on there, just the same as we have here. But see here, the histogram's been ticking down for the last several sessions. Even though the market was rallying last week, this market was still relatively weak. And as you see here, the MACD is curling down already. Stochastic pointing down, 33.42 reading. It only got up to high 70s on the MACD. Got the Bollinger Band coming down. Looks like tightening. Big move is going to be made. Will this 24.37 hold? Probably not. And there's another reason to want to be short. Not a lot of things bullish. We're seeing a global implosion right now. Things are going to get pretty crazy. Hopefully people keep their heads about them and realize that the system, the politicians, the central bankers, the big corporate interests are the ones that are responsible for this collapse, and they are trying to use this collapse to their advantage. And hopefully enough people wake up where we can save humanity and bring back a system that's more fair than the current system that we have. Right now, everyone's just kind of in a haze. They're kind of out of it. They don't pay attention to these things, but that's what happens when you have very smart people that are in control. They're running wild. They're doing all this financial chicanery. I mean, it's epic looting going on. And we're paying the price right now. And hopefully people realize this, and it can be stopped. You will get the level of tyranny that you accept. And people need to start caring, because it does affect every one of us, not just people that trade. This is going to affect us, you, it's going to affect your kids, your grandkids, and it's going to affect humanity as a whole. Looks like we're heading into some really dark times. Kind of aware that this was going to happen for the last few years. It was just a matter of when this bubble was going to implode. And it does look like we are set for implosion. So anyway, have a good remaining Labor Day weekend. It's funny, it's Labor Day when you had the Jobs horror show on Friday. It's kind of ironic there. But enjoy the rest of your weekend. Stay healthy. Take care. And hopefully you're positioned right, and you'll come out of this looking pretty good. All right, have a good one, everybody. I hope to do this on somewhat of a more consistent basis. Thank you.